The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman back. And this is a very interesting thing to see the Dow up 74 points. S&P's up 13. Comp index up 26. And we've got gold unched at this particular point, coming back from a bit of an early morning slide. Silver's down 21 cents. You got copper. Oh, is that being, that's just not being updated. I think that's what the issue is. Because gold right now should be GC. I'm going to go to the offhand. I just can't remember. LMNP. No, GC. I'll just go at GC for the moment just to see what's going on. Down a couple of bucks. All right, so what we're looking at, which is very interesting, is that bonds to the TLT, based on the TLT Lehman 20-year T-bond fund, is at 117.88, up 4 cents, with a little doji candle that says it's trying to make a reversal. Now this, we've been looking for this for a little while, and what I'm going to be talking about today being May the 14th. Time's just flying. May the 14th and Tuesday. I keep thinking it's Monday, of course, but it's not. It's Tuesday. So if it's Tuesday, we've got Steve. Steve did 2 great hours as always. Come after me. You got the options hour, Think or Swim. A great program. Another great program. You've got met Daryl Martin this on this weekend, Saturday down at the workshop. Whoa, successful workshop. Full crowd, just a huge crowd, tremendous. It was great to see Tom, meet Daryl for the first time. Eloquent speaker, and got some absolutely fabulous techniques based on his diagnostic efforts. And so let's see, we got Daryl, and then we go to Dave White. Of course, Dave has just got the new program. Got a front page of TFNN. You can check out Dave's new program that he's put together. It's really fabulous. I'm looking at the different gartleys and the butterflies that are forming here. I'm trying it just to see how it fits in with the ChapmanWave. Of course, the fascinating thing is that it gives you a specific area of the gartley and of the gartley, which you then can extend to the butterfly based on my methodology. When I see a peak C still to come, and there's a gartley pattern forming, it's just fantastic because it gives a heads up that there could be at least another leg up based on the ChapmanWave, and then you got to be ready. So just putting all these things together is really terrific. And so let me, where else are we going to go? I wanted to show the E-minis. One of the reasons why I've remained bullish, lightening up, but bullish nevertheless, is that in the, whoops, I just skipped over to something else. Here we go. ESM3 is because in the waveform I needed leg D in the E-minis, I needed leg D in the S&P, I needed leg D in the SPY. Why on earth is a leg D? It means in the ChapmanWave you identify the lowest, most obvious low bar. Let me just go to this. Actually, most of you get the SPY rather than the futures. So if you go to the SPY and you go to the low bar, let me just move the 120-minute chart out the way. If you go to the lowest, most identifiable low bar, that would be the low bar of the 18th of April at 153.55. 153.55. What is unique about this methodology? When I say unique, I don't just mean, it's rather a unique thing. I mean unique in the true definition of the word, meaning original, first of a kind, or one of a kind. And in this particular instance, it is one of a kind. I do not know of any other methodology that uses something like the ChapmanWave to identify, to clarify, to notify, and to also articulate with a sense of gauging. It's a sense of gauging the strength of a wave that's moving to the upside by saying it's gone to leg A from the low bar of 153.55. The stochastic MACD all turned around exactly the way they should On balance value gave you a fantastic indication. And then what happens is it goes peak A, peak B. And in the ChapmanWave methodology, what you anticipate is to get to at least a peak D. And I made this cartoon. I also used to be a cartoonist once upon a time, an illustrator and cartoonist. And in my CD introducing the ChapmanWave methodology, you've heard all these people, talking about selling May and go away. Well, May's not finished. Anything can happen. But up until now, the entire May month has been absolutely stupendous. Just a fantastic month. And it reminds me of this cartoon that I drew. I think it's right here. Is this yep, there it is. Slide 247 out of 476 slides, like a PowerPoint presentation. Here's this guy. He's lying back on his deck chair in the sun. He's got his radio on, and it says, well, there's a radio. I don't know what you did. With his iPod, let's say. And it says, today should continue hot and very sunny with almost 0% chance of rain. And a few minutes later, you look and it's raining. And the guy turns around and he says, he's in his bathing suit, he's got his dark glasses on, it's raining, and he says, his brother most probably does the stock report. Anyway, this is one of the I know over a dozen, I think, cartoons that I've got here that I drawn many years ago. So this is very important because when you're looking at the waveform, your criteria, your most important thing is to be able to identify and count each successively higher peak. You don't want to overlook, for instance, it says here in chapter 11, carefully counting the peaks. Then the next slide says, here we are, you got the signal, you got the up arrow, and it's going up, and it goes peak A, peak B, peak C, and then it pulls back very sharply. Well, you don't want to miss an opportunity because peak D, the fourth highest peak, this is how simple the technique is in its core. The fourth highest peak is where you can, but you don't have to, but that's where you can expect some kind of a pullback in the song. Buy at the low and sell at the high. This is a song that I wrote many years ago when I was going to write an operetta on the market, and then I decided against it. One of the songs was buy at the low and sell at the high. I then changed the words, and it has 4 verses, which we often sing in my Master Trader series, and we all get together to any big event where we have an opportunity. And the third verse goes, the wave goes to A and then to B. I'm not going to sing it right now. Even the anticipated C and D. That's when it flashes a cautionary light. But all you got to do is make your stops real tight. Now, what does that mean? It means that when you must identify that it can happen before. Obviously, the chart is just a price point of human emotion. So, not every chart is exactly the same, but patterns repeat like human nature repeats. Well, if you miss a peak, you can land up at C waiting for D, waiting for the train to come, but that was the last train until the next day. You don't know it. So what this particular slide 252 says, go to slide 253 because that clarifies that there was a peak that was just 0.01 or 1 cent lower. And that gave you your A, gave you your B, your C, and D, and there it is, peak D, and that means you can get a down arrow right there instead of that plus sign because it was a sharp decline. So that's your only obligation is to count it. Once you get to D, you can go higher, but there are other factors that you've got to be aware of. So let's go back to the SPY. The SPY made this low on the 18th. It went to peak A, peak B, peak C. And what I was anticipating on Friday was that we would get a leg D. I did not want to go short. I did not want to consider a short in the indices until the requisite. We had already got it in the Dow and the diamonds. I said, not good enough. I cannot have an outlier where you do not get your leg D in at least the S&P. And I wanted it in the Qs as well. We now have it. We're now preparing for some kind of a consolidation. I'm only calling it consolidation at this particular point. Why? Because, first of all, the weekly chart looks fabulous. Look at this. SPY leg E. Look at that. Leg E. I have to put the red plus sign above. But the MACD is very strong. Look, it's still the fast-moving average is still rising. The stochastics at 91%. We've got a couple of indicators saying, hey, now you've got to be a little bit careful on coming into the shorter term. And that says in leg D in the daily, we've got to be watching very closely for other things. Wait a minute. I see the Qs, 1, 2, 3. Well, the QQQ, my producer's saying, sing it, Basil. LOL. Yeah, LOL. I love to sing that song, but I'm not going to sing it right now. But leg D in the Qs, the NASDAQ. And that's with everyone talking about Apple. Hey, there are other stocks that are very important in the Qs. That's why it's broken the trend line resistance. That's why it's doing so well. That's why in the monthly chart it is broken out above very long-term resistance. Right here. It's doing it as we speak. And that is leg D in the monthly chart. So I just wanted to explain a couple of things about the waveform. I wanted to say that when you use other techniques, if they are robust techniques, those robust techniques say they should complement what's going on in your own technical analysis. That's all. It doesn't say it should take away, doesn't say necessarily, it doesn't preclude it, or it might, but it doesn't necessarily say it has to. Now, I have a question here. Let me just read it in the Den. Den is a great place to be able to read the different perspectives that people have. Mike Mack says, otherwise reaching longer-term target on S&P at 1650 or a bit above that many of us have been looking toward. It goes on, seeing some divergence with the VIX going up and holding steady as the market rises. So the question is, we just hit under there. Should we a pullback, then go after the 1650, which may dovetail with Basil's D peak? Okay, now let's do this. So those are good observations. Let me do this. Go to the front. My opening call. Now, here's a technique that you'll never read anywhere in history. There's nothing like it ever. I know that why, because I invented it. It's called the ChapmanWave stalk leg formation. And basically all it does, it's got nothing to do with peak A, peak B, peak C, peak D. It has to do with a particular pattern. The pattern is a psychological one that is put down as evidence on print. Now, I'm not a psychologist, but I'm still saying that, and I'm talking about market psychology. Believe me, I do know about market psychology. And what it says is that there's a moment historically in every phase of a bull market, and we're seeing that in real estate. If I can remember now, I'll mention it right now because I'm going to forget it. In the Boston Globe today, what are they going to do? They're signing the papers. This will be another classic thing that Boston tends to do, right at tops, in topping areas, I should say. First of all, it goes for having hotel rooms, new on the board, drawing board, hotel rooms, more and more, because we've got to have bigger convention center and everything, and then very big do it at tops. And what we're seeing now is that over the turnpike, the rights to use the turnpike, which are very seldom ever given. Prudential was once, in 1960s, the Star 50s, I think it was, the Star Market over here, which is Shaw's Market here in Newton, was over the turnpike. I'll talk about it when we get back, but I want to put it together with the stalk leg formation. I'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Dow's up 74, S&P's up 12. This is what I'm talking about. I'm still going into this whole thing about the S&P, but in the meantime, let's just talk about something else here that's really as important as anything else in the market as far as I'm concerned. Deal clears the way for Fenway Center. Boston Globe, Tuesday, May the 14th, 2013. Headline, of course, the front here is jubilant comeback for Bruins. Never used to be that sports was like a major thing in the front page like this here. But anyway, good for the Bruins. But it's very interesting how newspapers have changed. So then the next one is this deal clears the way for Fenway Center. Pike Air Rights, part of $500 million multi-use project. Now, what's so fascinating about it, Fenway Center's 5 buildings would include 550 apartments, plus stores and restaurants, parking garages, and a 27-story office, retail, residential complex. Most would be constructed on weed-strewn parking lots between Beacon Street and Brookline Avenue. Can you imagine selling parking lots for this? The money that they must have got for those parking lots. Back in the 1970s, I used to always look at that one on Newbury Street, that one building they always have these big paintings on the whole wall of that building, and I used to say to my wife, "Wow, this is the best thing you could ever have. You don't even need a toilet. You just need a little booth. There's nothing there. Anyway, just land." Anyway, so now someone must have sold that to sell the parking lot for this, they must have got big bucks. So Beacon Street and Brookline Avenue, two very important streets that many Red Sox fans walk through on their way to and from the ballpark. So now what this is, unlike the 1950s and 1960s, where the city government was kind of prepared to give away these things for the rights for a little bit of money, I bet that this complex in about 30, I won't be around, but in 30, 40 years' time, whatever it is, I bet that they rue the day that they allowed themselves to be dictated to, as to what the percentage they're going to give the government, because that's never going to go down. That'll only go up, like condo fees. Anyway, so now let's get back to this, and I want you to just quickly say, in the ChapmanWave methodology, we already had in the 120-minute chart one spike to the upside, nothing to do with legs. Then there's an oval pattern. Then there's a spike to the upside, and then there's a stalling area, and then it pulls back to the body. And I call that the leg. You can see here on Tiger TV. Tiger TV. Give me 1 second here. Go to Tiger TV. Get the picture. There it is. And now there's a second one. And then what happens with this is that the objective is to go to the neck. And then there's a peak, D, E, or F in the ChapmanWave, and you pull back. That pullback says it's called the beak, and when that beak concludes, it gives you a whole new buy signal, and then it's finished. It's done. For the buy signal, it doesn't tell you whether it's going to fail or anything. This one turned into a brand new leg, a brand new body, and now we're forming the neck formation in leg D. But look at this. This is very interesting. And I was asked about this in the den, about the volatility index. The volatility index, something's cooking. The volatility index went from 12.54 this morning, and the low yesterday was 12.50. I said 54. It was 12.50 early this morning, to 13.19, and the Dow's up 74 and the S&P's up 12. Something's wrong. This is what you get in options expiration, that there's this discrepancy. Something's happening. I'm going to keep a note on that, and I do have, for very unusual, I hardly ever do this, I'm having an update at 12:30 Eastern Time for my subscribers to the opening call, because we have a number of long positions. We have no short positions at this time, and I said that I'm going to be doing, I was a little late because I was away on this weekend, etc., etc., and I said I'd be getting back, but I want to give an update, even if there's no position changes. I just felt I needed to do that because I wasn't fully, even though I send out these 8-9 pages in the morning, I just didn't feel comfortable that I got everything I wanted to do. We're going to our first caller. We've got John in Philly. Hi, John. How are you?
Basil, good morning to you, and welcome back to Boston.
Thank you very much. Actually, I was out in the New Hampshire area, out by near Dartmouth College, Hanover, and Lebanon. And, it's so pretty out there. It's really pretty. So, yes, you've got a question.
Yes, Basil. I wanted to direct your intelligence to the daily gold chart. Gold, of course, came down very hard. And subsequent to the bottom on April 15th, 16th, the daily chart has rallied up into peak C of the ChapmanWave.
Okay.
And I'm wondering if you could tell us on page 239, ChapmanWave CD, how that rule and topic applies to the daily gold chart now, please.
Great. Okay, folks, we're going to be back with Johnny in Philly. We're looking at, all I do is I type in slide 239, I pop it, and there it is. I'll be right back.
TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at tfnn.com. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of tfnn.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of tfnn.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of tfnn.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of tfnn.com.
Hi, everyone. We're back. Basil Chapman, Tiger Technicians. A number of questions, of course, during the break. And I say, of course, because as we're getting towards the tail end of the show, that's where the questions seem to come. But we've got John in Philly talking about the GLD, referring to a chapter that I have a slide. This is slide 239. Sharp declines can take a while to heal. While coming for sharp sustained decline, the first rally could lead to a buy mode failure and subsequent restart. So it goes into this in careful detail, but even more important is that the patterns that I look for, that I expect to repeat, are the patterns that come down really sharply, take a bounce, and then fail to go further until they take time, but they don't necessarily take price on the downside. I think, John, that's really what you're referring to, right? Where we used
that is correct.
Where we essentially what I call wheel spinning, until the wheels can grab on, if it's on ice, until it can grab the asphalt, or if it's sand, until it can find some harder sand, the wheel is going to slide even though you've got your foot in the accelerator. What happens is that as you take your foot off the accelerator, it gives the tire a chance of being able to adhere to for the rubber to adhere. and to be able to get the friction that's needed. Well, that's the concept. That's in my mind. Of course, that's not a scientific or a mathematical way to look at it, but it is a conceptual way. But if you look at it mathematically, what you will find is if you look at the GLD, which is the Spider Gold Trust, trading at 138.59, up 16 cents, having made an extremely powerful down move, gap down to the low of 130.51 on the 15th of April, what I said is, I believe there'll be an attempt to rally, and that rally should try to take it somewhere above the 9-period moving average of the daily. And at the time, I think we were looking at 130. I don't think it was 100. I was really looking at something in the 138 to 139 area. Well, what happened is from 130.51, it had a sideways movement. But the actual bar that took us to the low is a bar that I call a climactic volume spike. And that essentially says that everyone who wanted to sell just threw up their hands and just gave up. They just sold at that particular moment. They were selling the day before, but when that monster gap down occurred and it kept going down all day, every bounce was just hit with selling, that was absolutely people saying, I'm done. I'm out of here. Goodbye, gold. In fact, they most probably got out of the very last of anything, or they took a huge chunk out of their gold. This is the way the volume seems to have been approached. And that, to me, is what I call, that's where I use volume exactly as volume. I don't use it as unbalanced volume or other ways of looking at it. It's purely volume. And that says to me that regardless of what the sentiment is, the technique that I use for this particular, and it has to occur on the day. There are times when it happens a day before or a day after. It could have the same conclusion. I'm very strict about this. I only use the chart that has that formation. That's the GLD. The GC, I think, had a day before, had major volume. That's the contract itself. So I don't use that, but the GLD did. And what it says in my work is that for 28, but it could even be 38 to even 52 bars of that particular price time frame, except that I don't use it for monthly. That's just way too long. But I definitely do use it for weeklies, and I definitely do use it for dailies. And now look at this. We've been up above the 130.51 low for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. So we'd have at least another 6 days to go without getting to the 131 area, 130.51 area, to say at least the technique is right. Because what I said is it's an arch formation. Now, I covered that, and what it says is that as long as you have high-level consolidations above the low, you're using up time to consolidate and not price, number one. Number two is, it also says in this pattern that the dreaded H in my CD introducing the ChapmanWave methodology, there's a whole section I have on the pattern that I call, well, I used to call it the dreaded H. I'm trying to refer it now because too many people found that their interpretation of what should happen got a little confused because they thought that if it was successful, it should go down and close below the left side low. They're probably right, but it's because I came about this methodology when many people were expecting gold stocks at a certain point to keep going up, and they kept going down. So I said, man, you don't want to see that H because that could turn into a dreaded H, meaning if it was successful by retesting the left side low, that'll be great, but it's probably not going to be. That was my thinking. Now I'm just going to call it the H pattern, and that H pattern says, let me show the pattern, that at a certain point you get to where you've had so many of these arches that have gone to lower lows that the price has just run out of steam to the downside, but it hasn't got enough steam to make a V-shaped recovery to go sharply back up. And instead what it does is goes from one H to another, which becomes an M pattern. Could be wrong, but my suspicion is that we're making some kind of an M pattern here, and that because there's a high-level consolidation. Now, your question is basically, although I would get to a peak C and talk about it, but this is a peak B, so it's the same thing at 143.43. on the 26th of April. And basically you can see there's a blue line that I drew there like that. There's another one that goes down like that. That's that falling axis, an expanding triangle or wedge formation. And it says that within that, the next time you break to the upside, you should have a move that is double the height of the low that was recently made to the breakout point. And that would take you to round about, I'd say 144 to 145. So here's my thinking. The MACD fast moving average, technique number 3, is still, the fast moving average is still very strong. The stochastic has pulled back. On balance volume is flattening out and says, you know what? We could be within a day or two of another bounce. And that bounce could be a larger arch, but it's still within the concept of the M formation, saying that at some point we will go back down. And now here's the other technique, the 5th, I think it's actually the 6th technique. The monthly chart is a Roman candle. It's called the ChapmanWave Roman candle because I've never heard it really discussed the way I talk about it. And that says that if you start to close underneath half of the wick of the bar that has that particular pattern, and that would be at the 137.50 area, there's a good chance that at some point you're going to not only test the low 130.51, but you will break it. So I'm looking for a counter trend rally, not of tremendous strength, but of very nice percentage perspective. In other words, I talk about strength, I was talking about 15 points to the upside at 10 to 12%. I think rather what we're looking at is a test above the 9-period moving average of the GLD at 143.84, and that could take you to about 151-ish. Oh, so I suppose that is 13 points. Yeah, it's just that 13 points. Yeah, it's a good percentage. But it's not a huge point move. It's more a better percentage if you want to think of it as percentages. And then I think we're going to land up at some point coming back to retest the one, what did I say it was, 131? 130, I should have said it, 130.51. So I hope that gives you a sense.
That was incredibly thorough, and I understand all of it. So thanks so much.
Thank you very much for calling, John. Very perceptive question and taking all these different techniques together. Thank you. Putting it together for me, and I appreciate that. Thank you, John.
Very good.
So now I had another question. Let me just go in order here. The question was, well, first let me go to this question here. As time permits, can you add your thinking of where the VIX is from your chart pattern? Well, I'm just going to say this. It's real simple for me. We've had this big spike up in the volatility index this morning. I don't know what the aberration is, why it would be when the Dow is up 75 and the S&P is up 13 points. The Dow is actually lagging badly because the S&P is at 0.82. The Dow should be up 0.75, 78, 77, somewhere around there. Just a couple of 0.02 percentage or 3 percentage less. So that's a little unusual. Something in the Dow, I don't want to see what it is right now, but one of the Dow stocks is lagging badly. Now, this is really important. If the volatility index has a spike like this with no news, if it can have a higher base, in other words, at 13.09, if it's raising the base and saying, hey, a little bit too much bullishness here, everybody, I'm getting ready for a bit of a turn to the downside, you will see the volatility index not break the 12.50 level of today, but instead maintain this level. And within 2 days, you suddenly see the volatility index above the 1353 level, which is the PD high in the ChapmanWave. Isn't that amazing? Even the volatility index 120-minute chart has gone to a PD and pulled back from 1353 to 12.50. If at any point this week the volatility index gets to 13.80, I'd say 13.85 or higher, and the Dow is down 130 points or more, that's probably going to signal for me that there's some kind of a turn. I'm calling it only a short-term pullback for the starters. We'll see if it can move higher. And now I'll go back to the stork leg formation. Leg D in the Dow diamonds. So we can expect maybe an E, could even get an F, I don't know. But this is the point in the diamonds that says, okay, start getting a little bit cautious because you've got leg D in the day, leg E now in the daily. You see the daily right there. Every day my subscribers get an incredibly acute and I wouldn't say lengthy, because in this one I don't give it too much length. I give it maybe 4 or 5 lines, but I go through each one of these quadrants. They're actually 5. I like to call them quadrants. This is the short-term trend, Richard Arm's trend index. This is the Dow daily. Nothing there, but no candles, just bars. And the S&P is now in leg D. Everything's set to say, you know what, from here you've got to be a little bit careful, but there are stocks that I like. We went long a stock today, which is holding very nicely. So you can go long. I am looking to go short, because I think this is a very important period where you must not be afraid of going short. If the volatility index remains in the 13s, no, if the volatility index goes from 1308 down to 12.50 and then lower, that's going to help this market rally. So we're along the Dow Diamond, 200% along the Dow Diamonds. We're going to stay in that position as long as I can. I don't have a position back into the GLD. We did have a trade 1/10 the GLD, one of the ETFs. I might get in there again. I don't know yet. I don't know if I want to waste money by going to something that I'm not that convinced about. Then very quickly, DXY, I was asked about the dollar. Well, the dollar is in leg B, made a peak B. I'm expecting the dollar is going to go to 83.45 to start leg C. But what's interesting is that the weekly chart has been improving and targets 84.10. That's the left side peak from back in July, was it? August, the week of the 27th of August last year, 84.10. And then the monthly chart is actually acting very well now. Instead of breaking under the 9-period moving average, it's walking the 9-period moving average. So let's quickly do the euro, and then I want to do the EEM. There's another stock I was asked about. I'll get to it in a moment. The euro is making an H pattern. This could turn into that dreaded H. This could even turn into one of those head and shoulders patterns if the euro starts to break 1.266, because this is 1.299. I just don't know. I think it's in a trading range. Then the question I had in the demo was the TLT. See, it's almost the same thing as the euro. It looks like it wants to pull back here. So I was asked a question about the TBT as well. You know, I suspect that over a period of time, the TBT is just going to slowly crawl higher as bonds crawl lower, because even though the Fed is pushing and pushing to keep it down, there's an opportunity there for that. I've spoken about this for a while. If this economy is coming back real nicely, you want to see some interest rate. You want to see some tension. You want to see some give in the yields. You want to be able to say, hey, there's pressure for mortgages. There's pressure, and the pressure should produce competition, and the competition should say, okay, then there's some flexibility. We can actually increase the rates a little bit because there's so much competition. It works to the Fed's advantage. So talking about that. Now, the next thing I want you to do is I want you to talk about a question in the den. What was it? NSM, I think it was. NSM. I should remember it because I'm so embarrassed that I forgot. Oh, I wrote it in the wrong place. NSM. Never remember what it's called. NSM. There it goes. Nation Star Mortgage Holdings. It's just, you know, sometimes you look at a stock and what it does, it doesn't just thumb its nose at you. It wiggles its fingers, you know, where. That's exactly what this is doing. I'm taking it personally. I wanted to buy this. I put it in the newsletter as one of the stocks that I liked. And then it was right here at this peak B, and it just looked like the MACD and the stochastic were rising, but it just wasn't breaking out. Well, it did break out. This is Nation Star Mortgage Holdings, trading at $45.50 up $1.69, 3.86. No, I shouldn't complain. We've had some real nice stocks. We've had some nice gains, but this is upsetting because it really is one that I love, because the monthly chart was only at peak B and now it's in leg C and it should go to a D. I'll be right back. Basil Chapman, Dallas up 80. I'll be right back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share. Over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We're back on tons of calls. Okay, let's just go one at a time. The IWM, the Russell 1000. Another reason why I didn't want to go short this morning until there were certain things that came about. I could see them visually. I needed to know that they could be there. Look, IWM, the Russell 2000 at 97.87. This is leg C with very strong technicals. It's going to take quite a bit. Real bad news to get it below this doji low of the candle of yesterday, below 96.43. It's at 97.87, up $1.11. I have to tell you, I'm trying to hold off going short and as long as possible. We'll see in my 12:30 update what I decide to do. But this is tough stuff. Let me tell you, if you want to go short, you can have your head handed to you, and then the moment you decide this is not the time because I could have my head handed to me, is exactly the time. I have to do the analysis. We'll see how we go about it. I was asked about LinkedIn. Look, here we are. Suddenly a stock that got hammered from the 202.91 high. We were long this and had a very nice trade. Could have had a better trade if I had remembered about the earnings report that day. It's a pity, but that's okay. Can't complain. Went from a peak D in the chapter. Remember I was talking about the peak Ds that are so important? Well, look, 202. Oops, what am I doing? 202.91. There it is. In the daily chart, the one on the left. And look what happened. It plunges down to where, let me open this up so you can see. You see the pattern? I even put a left side, right side price time match. Well, it went right there. And now it's rallied beautifully. It's up 8.49 at 183.52, up 4.84. I said to my subscribers, I wanted just a little lower down. Why? I wanted to test it. I wanted to get a little lower. But this is fantastic. It means that if LinkedIn becomes a little bit of a leader here, it can continue to help the Qs. And look at this, the pattern that I was looking at, the spike to the upside, there's that Roman candle, an inverted Roman candle. If at any, I don't know if it's going to, I'm just saying, in this pattern, if it gets to 193.60 to 194.50, there's a real good chance it wants to retest the high of 202.91. It's made a peak C, a leg C in the weekly with a very interesting candle. This candle is going to give us an incredible amount of information when it closes the end of May. So what I'm saying, there's a rotation going on. Had a real quick question. So LinkedIn's looking very good at this point. If you are long it, I would say just put a stop. This should be leg B. Yeah, leg B in the 120-minute chart. So what you're really headed for is the gap low, the gap high of 187.75. The moment it gets even close there, if you're long, just put a stop on some part of your position. Do expect a pullback. I have to tell you, if it only pulls back and holds 180.05, which is the 9-period moving average, to maybe 179.10, and then goes back higher, that's very nice action. Then it really wants to fill the gap. So one at a time, I'm trying to go through these things without getting excited, without getting carried away. There's another great question here in the den. Future dollar. Yeah, the dollar, I think I just do the dollar DXY? No, I think I did the others. So the dollar, yeah, I did the dollar. The dollar starts leg B, leg C above 83.44. This is the index. I am not doing the futures. Quickly, there's in the den a couple of questions. Yes, very good. So if you went long yesterday on LinkedIn, fabulous entry point. All you need to do, make sure you do not take a loss. I tell you why, because if it comes back under your price now, it will go down to the level that I want to, which I think was in the 167, 165 area. But so far, this is really good action. Okay, here we go. Now, about to wrap up. Let me do this. Give you parameters to look for the rest of the day. I'll be back tomorrow. Leg E in the Dow. We're breaking above the weekly resistance line. The week is not done. In fact, it's just barely begun Tuesday today. So let's see where this closes in leg D. So far, there are no technical indications of negativity. There's a chance that this move can go towards 15,271 to 15,310. And then turn around. I don't know. I'm just saying that's the trend line we're looking for. MACD is good. Stochastics at 93%. Nice action so far. I'll be back tomorrow. Go to the front page of TFN and check it out. My opening call. Use your Tiger dollars.